everyone and welcome for this new video on WED. Today we're going to talk about pullbacks, especially healthy pullbacks versus not so healthy ones. So what does it mean in a healthy pullback? A healthy pullback for me is when the stock is coming back down a bit in price, but it's not falling down, it's not crashing, and usually it's a point where when the breakout happens, it is more likely to be sustained and work in our favor rather than flashing. Okay. To go ahead on this topic, I've selected two stocks and SPY, just to provide a few examples on where we can find healthy pullbacks and when the pullback instead is one that doesn't work very well. And the differences between different kinds of stocks. So what we can expect or different kind of equities, let's say, or commodities, just to get an idea that these pullbacks happen basically everywhere, but not in the same way. And sometimes it's just better to trade something different. No, it's not that you can trade pullbacks and breakouts on every single kind of stock or equity or ETF or forex. It really changes. It depends on the specific case. Even from stock to stock, it can be very different. So let's dive in. And first of all, we're going to start with the CCXI, which was I think the leading upper from yesterday. And we can see here, this is the 1 minute chart. We can see it made a very drastic big move from 18 to 32, and it came back down, and this is I would say this is a pullback. Yes, it is, but it's okay in terms of how deep it goes back down from the move higher. But considering how quickly this happened, it's not one that I would consider in this case and in this case study, that I'm considering here. Whereas it's much more interesting, like this one already, like here. This is a push higher, and then we have this long consolidation phase, and we can see that even though this breakout actually kind of failed, no? It never really broke this low here of this candle. And actually the lows were continuing to go higher. So even though you may have entered here and stopped it out, break even, or just a bit low, it never failed actually if you placed your stop correctly, which in this case would have been here, no? At this level. Let me highlight it. This would be the correct stop, okay, if you take this breakout here, because it's the low of the previous candle, and it made a move higher. It again, you had another flat bottom here, and consider that these moves are, I mean, very good. They look like big, small candles, but actually they're pretty big. You can see that like the breakout here was at around 33.50, and it went all the way to 34, so 50 cents move. So this is a good pullback with the higher lows, and it resolved the higher. Here we have instead another decent pullback with the lower lows, lower highs. Basically the lows really never broke through. Only this candle is a bit lower, as you can see, from 33.25 to 33.20, and that's why you actually cannot just be very strict in those kind of rules to identify a healthy pullback or not. This one instead is not a healthy pullback in the case of this candle here that you can see, it made a high, it flushed down hard, it came back down, it sustained this level, which is good, but I wouldn't consider like this candle for a breakout trade. And indeed it didn't really resolve until it actually proved that it could hold this level for way longer than this. There is these two candles that are the whips that we have usually at around 8 a.m. So don't consider these just mess the chart a bit, but they are not real candles. These are candles produced by the orders going through the time and sale that happened before. No, so it's something that you cannot really trade. You cannot buy here and sell here on this candle. So don't mind this. But you can see that this low held up from the previous push, and then it actually made the move. But this was a bit different. Maybe we can see it here on the 5-minute chart. It's still not a real pullback, as you can see, because in this area you can see it never really pulled back within the 5-minute. It's properly, at least. And this is also because there are all these long wicks up and down that really don't make sense on this chart. Then we have this move higher, and again we have a very nice pullback here, where you can see this level never broke. Actually, it went higher and higher, and when the breakout happened, which was here, we can see that the low of this candle wasn't really a problem. We have this long wick down, but again, it's not valid. This is not a real candle. And it moved higher and higher, and it held very well. These were all healthy pullbacks. This one, if you consider a very long one, because it held the low, but like not within this area, like this one, it was not a healthy pullback. And we're going to see other examples of this. Another not healthy pullback, like not at all, is this one, because we see it made a move higher, and it flushed down way lower than the area where the price area where the push higher happened. So even if you you want to trade the first 1 minute candle to make a new high, this is not the one you should trade. And there is a good reason for this. Imagine that you're buying here, okay? Somehow you decided to buy here because maybe you see that this candle didn't break the previous low, and you're anticipating for a new breakout. Now this candle likely dropped down very quickly, considering how deep it is, and you may have been stuck in your position, and there are people that maybe didn't sell and are now deep in the water. And what are they going to do when the price goes up? They're going to provide resistance because they're going to sell. And even more, people who have a short bias on this stock, once they see this happening, this for them is a breakout, and on the lower side. And so they're going to add on this position. And here, when they're going to see the stock hitting the 9 EMA, they're going to add in their short position. This is not bullish anymore here. Because of this, you can get a very quick squeeze often in these areas, and those squeeze usually resolve in what then later will be the top candle that will define a wedge, and maybe we're going to see it in a different stock. But for now, let's stick to what we were discussing. And we can see that the stock actually continued to go down for a bit, and then started climbing up again. And as you can see here, it tapped at this level again, no? That you can see it provided support here, and it kept providing support. It didn't break this level. Once it went higher again, you have this first move high, which maybe you could have held a bit because I mean, you could have hold your trigger in this case because of the shape of this candle, but it really didn't break the low here. So when you got this new high, no, on this pullback, was a valid pullback. It was supported by the 50 EMA. The low of the previous candle wasn't broken, so very, very valid pullback if we consider this. I don't like this candle, so maybe I wouldn't traded it, but still was valid. And you can see the move higher was quite good. And here we have in two occasions, like here and here, a bit of a tricky situation. The low of this candle, no, right here, didn't hold. I mean, it broke through, but what's important to notice here is that the price came back up above this level, and so the breakout here is still valid, because actually the low was recovered, no? This lower level was recovered on the close of this candle, and this other candle never broke through. So once you're in this position and you enter here, your stop should likely be either this level or this level here. So 35.20 or 35.13, 15, okay? So just 5 cents or more. If it in this other example, which is right next, and shows something a bit different, this went quite lower, like from the actual low of the pullback, which was here at around 36, it went down to 35.63, which is a bit of a dip. It is a healthy dip though, as it is maybe the first one on to the 9 EMA here, and so people are likely maybe going to buy it again, and they did. And again you can see that the candle closed above 36, which was this level here, no, the low of this candle. And if you're trading breakouts, you wouldn't have taken any position here yet, so it was perfectly fine. You would have taken this one, okay, for the breakout, which was not very clean. It went higher from 36 or 37 to 36 or 64, which is still a decent winner. Then came back down, but as it made a new candle here, printed a new candle, it immediately resolved much higher, 37.20, which is a very good profit loss ratio here. If you consider your stop should be here on this level, 36, also because it is the whole dollar, and if it breaks again, it's not a good sign. Then we have another pullback, but as you can see, this one is not going to resolve well, at least most likely. It can always happen, but it's not going to resolve well because it went down pretty quickly. It didn't recover immediately, this level, and it kept going down because now people were short biased. Then we have this rip of this level, which is this is a different kind of strategy. So maybe we're going to talk about it another time. This is a dip from the breakout level of this area here. So a different kind of trade. It's not a breakout trade. I mean, it is a breakout trade, but not within the ideas of pullbacks. It's more like a dip. And then it kept going down. This is completely choppy, so I wouldn't trade anything here. I mean, not at least in the context of a pullback. This is not a pullback. This is just choppy action where the stock has yet to decide which way to go, and so not really interesting. I want to go also on CEI, which is a very different stock with a much thicker way of trading, with the huge orders on the level 2 on the time and sales, also because of the lower price. As you can see here, we're talking about $2 against the versus like 38, so quite a big jump. And we can see something similar on the 5-minute chart. So considering it's thicker, we can look for breakout trades on the 5-minute chart rather than the one, whereas on the one it's quite choppy, and it is also a bit choppy here on the 5-minute. But for example, you can see that this trade here from 227 to 243, which for this stock is a pretty big move, was a healthy pullback. This low never broke through 222, 222, 222, and when it broke 227, sorry, 232 is a bit in the middle. It's a 1-to-1, but this would have been your first target, and then if there were not like other daily levels above, you could have easily taken this trade. And then finally, I want to quickly go to a very different kind of thing, which is SPY. SPY is not a stock, and it doesn't behave actually in the same way. And as you can see it like here, where this is still the 5-minute chart in this case, and you can see that in this move higher, it came back down, testing the levels very, very often. SPY moves in a bit of different way compared to stocks. It would be considered more choppy on the 5-minute. Maybe you can increase the time scale to see what's going on a bit better. But still, if we stick to the 5-minute, we're going to see still pullbacks, but they're usually not healthy ones. But you can see that like here there is no pullback at all. It is still making new highs. Here it makes a pullback with a bit lower low, holding this level around 433, and it resumed from here. But this one broke every rule we just applied to the other stocks. So it's not something that you can apply on everything. No, you have to consider how the stock or the equity or the commodity, whatever you're trading, is moving, and try to understand if the technical analysis, because trading pullbacks and breakouts is a matter of technical analysis, there is no fundamental analysis in it. If this equity, commodity, stock is moving in that way, it means that traders are looking at the same thing. If it doesn't happen, then you shouldn't trade those. No, as they continue to be proved valid, then it means that people trading that kind of stock are watching those kind of moves, and this will result in something easier for you to understand whether the next trade that you may be taking is going to resolve in your favor or is going to flush on you. Which doesn't mean you cannot take like this one here, like it's a bit of a deeper pullback, still good, because you can see it made a big move higher, and this pullback didn't retrace the whole candle, just half of it. But this breakout here is overshadowed by these previous candles, and it makes it a bit harder for the stock to actually keep going higher here. So people are still trying to recover from it, and it takes time before the stock can actually make the curl and continue going higher. But you can still trade this one. You just have to be a bit more cautious and maybe take profit sooner, which is also one of the reasons why this stock actually came back down immediately. Because if it breaks and many people think that it's not going to go much higher, they're going to sell soon, and this will make the price go lower again. No, and having a sort of false breakout, even though this was a breakout, because from 34.29 went to 34.75. It's a 45 cents winner, so more than decent. Okay, so that's it for today. I hope this is useful for you, and if you have any questions regarding pullbacks or breakouts, feel free to ask in the comments. I'll try to go a bit in detail when you have questions, and if it's worth of a video to explain something, it's a good idea for a video. So feel free to ask everything. See you, stay green, and bye bye.